Hi everyone, welcome on Money A. I'm Mark, and today I am with Atul, founder and CEO of Snipp Interactive, and with Jaisun, CFO of the company. Snipp Interactive is a loyalty and promotion technology company that provides mobile marketing, rebates, and loyalty solutions internationally. How are you guys?
Good. How are you,
Very
Mark?
good. Awesome. Always great to be with the founder of a company, because this way we have the whole presentation and we see like the real why you created the company, this type of thing. But before we go any further, could you tell us more about Snipp Interactive? What is the company?
Sure. I'm going to present a small set of slides that can help guide some of the conversation here. What does Snip do, right? So we are a company that helps, the world's largest clients make shopping fun for their customers, very simply, right?
Okay.
And in that process of making shopping fun for their customers, we collect a lot of great data that actually drives very intelligent decision making for our clients. That's what we do. So, some of the types of programs that we run, and all of this document is available, on our website, right, under the investor section. We run a variety of different programs that make shopping fun, ranging from, lucky winners, gift with purchases, loyalty programs, rebate programs, different types of incentive programs that, attract customers for our clients and help them retain them.
So basically your company's target is to attract the customer and so to keep them for your clients. That's it?
Right. So we work with a variety of Fortune 500 clients, like I said, some of the world's biggest companies like Nestle, Procter & Gamble, Unilever, Kellogg's, many alcohol companies out there,
Okay.
where we help them make their shopping experience for their customers really fun. And in the process of making that experience fun by running many kinds of different, promotion and incentive programs, and we collect great data about the user.
Okay, and so basically once you get a client, so you acquire them and then they stay with you, right?
Right. So we do programs on behalf of our clients. So we are an enterprise software solution provider that power the actual programs that are running in the market on behalf of our clients. So you're never going to see Snip advertised in the market. We're not a consumer play today.
Okay.
Opportunities for us to create our own brand. But today we run, all sorts of different programs for our clients, ranging from simple giveaways, instant wins, sweepstakes, all the way to points-based loyalty programs. So for example, we run, Starbucks's loyalty program that enables, Starbucks to give you points for buying Starbucks coffee. In the same way, we run programs like Clorox's PowerPoints. I'm assuming you can see my screen, right? Where, users can enter this program, submit a picture of their purchase receipt, get points, and then redeem the points for all kinds of amazing, rewards that the client has created for them, and in the process, make them loyal to the client.
Okay, so basically it's what you said. We see the company, you took Starbucks, so you took the company Starbucks, and every time somebody is redeeming points, they are actually passing by your company. That's it?
We run the platform that allows them to get points for buying their products.
Okay, and so you mentioned Starbucks, but what are your biggest companies? Sorry.
So we work with, over 100 different large companies around the world.
Okay.
I think if you look at our website on any given day, you'll see, different companies from, the US, from Canada, in Europe, some in Asia, who are running different kinds of programs with us to help them drive their customer acquisition, retain their customers, and then have a conversation with their customers in a fun and engaging way, all with the view of trying to understand you better, so that when they talk to you, they can have a more pertinent and personalized conversation.
Okay, and Do you have any numbers regarding the market, to help us see how big is this market?
Yeah, so we today, today we are operating in a market that's about $160 billion, right? We do a lot of different types of programs on the right-hand side of this wheel. We do
Okay.
about 500 different programs in a year, and we are only helping with the software and the solution around driving and implementing these programs. But there's a lot of opportunity for us to take the data that we generate from this part of the ecosystem, right, and help our
Mhm.
clients place more effective advertising for their own programs. So, today we play in the world of marketing technology, right?
Okay, yeah.
But the data is going to enable us to actually get into the world of advertising technology because we have better understanding about where Mark buys his products, what he spends on them, how much he is, what he buys, where he buys, how much he spends on it, and what else he's buying when he goes shopping.
Okay, I see. Yeah. So yeah, so definitely this market is gonna like grow fast, I guess, because like all the technology market. Is there like a specific component annual growth rate regarding this market, or we don't have this number?
So is there a specific what, sorry?
Compound annual growth rate.
Yeah, so I think the ad tech, the marketing tech, I don't have that off the top of my head, but it is growing at a compounded rate of, you know, over 60 to 70% a year.
Okay.
Um, and it's a really dynamic market that, with especially now with, cookies going away, right? The need to build programs, and to understand the customer and collect data and build a database around a user and their purchasing habits is becoming more and more important.
Okay. Thank you for this presentation to show us more, to see deeper or what Snipp Interactive is doing and where it is evolving. And recently you raised your earnings, and when I saw them, we can say that they were pretty strong. Could you highlight specific numbers about it?
Yeah, Jason, do you want to talk about the financials?
Sure. Yeah, so our Q3 of 2021 was our highest ever recorded quarter from a revenue perspective, as well as net income from operations and from EBITDA. So we recognize revenue, and all the numbers I'm going to be providing are in US dollars. So our revenue for the Q3 period was 5.4 million, and that is 54% higher than what it was in Q3 of 2020, which was 2.1 million. And we also recognized net income from operations, which was 169% higher than previously at 165,000. And our EBITDA for Q3 2021 was 480,000. And that is EBITDA growth of 349%. So those are some of the big metrics that we delivered in Q3. And then if you look at our 9-month period, so going from Q1 to Q3 of this year, our revenue was increased by 69%, bringing revenue to just over $11 million US. And that is much higher than what it was in the 9 months of up to September of 2020, which was 6.5 million. As well, our EBITDA for the 9-month period ending this year at September 30th was about 1.1 million US, which was significantly higher than what it was in the 9 months of September last year, which was only 186,000 in EBITDA. Okay. So those are some of the strong metrics we've been delivering this year, as well as just in Q3.
Okay, and regarding, let's say, each semester or each earnings every 3 months, is the growth significant? Like, is it always like growing, or sometimes it's sort of stagnating?
So this year in 2021, every single quarter that we've recognized, we've shown significant increase in the top line, as well as from EBITDA growth. So every single quarter this year compared to last year has shown significant improvement. And the last 2 quarters are the highest EBITDA quarters we've had, specifically Q3. So we're seeing some great traction on the financial side, fundamentals for the company. as we are increasing our scale of programs and going into new geographies and new industries.
Okay. Well, this is impressive. And so, regarding the debt, do you have any debt? And what about cash flow? Are you positive now?
Yeah, so we've been cash flow positive for a little while now. So for the 9 months ended of this year, our cash flow for operations was positive 365,000. And so that shows that, you know, we haven't needed to go to the market for financing of any sort. We've been able to use the cash flows that we generate to invest in our growth. And the last time we did a financing for equity was in April of 2018. So it's been a few years now that we've been able to not have to go back to do a financing. And the reason why we haven't done a financing in that period of time is because we felt that we were not at a proper valuation, and we did not want to dilute our existing shareholders for no reason. So from that point of view, we're not looking to dilute shareholders and do a financing until our valuation is more in line with what it should be.
Okay, so you're answering before I was about to ask this question, you know, because when I was checking the fundamentals about the outstanding shares, I saw that there were 235 million outstanding shares. And it was one of my questions if we could see some more dilutions, because, you know, I feel like in this sector, it's growing fast and sometimes we have to burn cash to make the company bigger. So it's great about what you're saying. And so if we're checking the stock price right now, we are almost up. When I say you are almost up by 500% year over year. 42% sorry, is held by insiders. And I think this is great. And so it's one of my questions. So what could we see for, let's say, the shareholder in the future? Because you still have 235 million. Could we see a reverse split in the incoming future? Could we see something like that?
So, you know, first of all, I think what we need to see in the near future, all of us, is our valuation better reflecting the value of this company, right? If you look at our trading comps on the Toronto Stock Exchange, on the NASDAQ, on the OTC in the US, they all trade at between, 8 to 10 times their revenue. And most of them, if not all of them, are not actually profitable, in debt, right? But they have a better valuation than us. We are a company that's growing 70% plus on the top line, 500% on the bottom line, right? We're cash flow positive, net income positive, and we've been growing quite significantly for 2 years now. We were focusing the last year on growing our bottom line to profitability. And now that it has reached profitability, we're now growing our top line, with that profit, right? And we're taking the earnings that we make and reinvest it back in the business for future seeds. So, what to expect in the future is that, we're going to continue focusing on profitable growth, right? We talked about our share count. It is high. It is high, and we have to fix that, and we will fix it, but we'll fix it when the opportunity is correct to fix it, right? We don't need capital, but if capital became available to us around a significant opportunity that can take us to the next level, there is no reason why we wouldn't entertain those opportunities, right? But I'm not in the market right now looking for capital, right? What I am in the market for right now is continuing to expand the business organically. And you can see the growth, 70% growth this year, right? And you'll see those trajectories continue. We've been making some frequent press releases about, new industries, new markets, all with some of the world's biggest companies, right? That will continue to drive organic growth. But we also now have a very interesting platform, right? That is profitable, that is generating cash. And I can spend that cash in different ways without actually diluting myself and shareholders if I don't need to, right? So as these opportunities come around, right, and as our valuation gets to a point that is more reasonable, right, we're still half the value of what our competitors are, with about 10x the quality of financials, right? Debt free again, net income growing, revenue growing, right? Client base growing, geographic coverage growing, employee count is the same, or very, very small, right? So we built a platform that can scale now. right? But as we do that, we are seeing and evaluating different types of opportunities to, you know, increase our exposure in the US markets, even maybe potentially list in the US markets. All of those are opportunities available to us.
Okay.
Add components to our platform to help us broaden our share of wallet inside our clients, through inorganic acquisitions if it makes sense to do. And it'll only make sense to do if it drives our revenue significantly, right? And looking for institutional investors to now start looking at our stock and evaluating the future. So even though we've grown from a share price perspective, as you were pointing out, Mark, a lot, it's actually irrelevant because we're not even yet at the point where we should be.
Yeah, sure.
Which is totally the company's fault for allowing the share price to decline, to the levels that it did. But it hopefully presented great opportunities to people who were busy focused on trying to build a profitable penny stock company that grows, right? And that's what we've been doing, right? The insider percentage is pretty good. I personally bought 6 million shares, sometime last year in the company. Jaisun bought shares. We're going to continue to buy shares as the opportunities arise for us, as insiders. So we think there's a long way to go in our share price before it catches up with the valuation that just our competitors are at.
Yeah, it's good that you're talking about fair valuation because you're totally right when you're saying that the company is right now undervalued compared to its peers. Regarding, as you said, the fundamentals, positive, that is doing positive cash flow. So, and talking about organic growth. So yeah, it's very interesting, and thank you for talking about it. And so, when you are talking about organic growth, what short-term catalysts could we see short-term, and where would you see the company in the next 5 years, as an example?
So I think for us, we already have been talking about multiple catalysts that we are actually living and experiencing as we're speaking right now. We have new industries coming to us, the research industry, the world of market research, right? So if you look at this chart, that I had, last year we did like, if you think about our company early last year, we did nothing in this industry. Now we have the world's largest companies. We have a French company, since you're French, called Ipsos working with us, right? A huge global company, right? We're working with them in 39 countries right now for one of their clients, right? We recently launched a second client of theirs, right? And they have multiple clients. So we've got, what catalysts do we have in the short term? We've got new industries coming to us, and we're deploying with them, piloting with them. As they see the value of the data, the value of the platform, they start rolling us out, right? We've got our existing clients who realize that the value of what we're doing for them in the US market, needs to be taken out to the rest of the world where they all operate in. Think of a P&G. They operate in every market on the planet. Think of a Kellogg's, think of a Clorox, think of a GSK, think of any of the clients that I was showing you on this page, right? Think of Nestle, think of L'Oreal, think of Estee Lauder, right? These are all clients that are global, right? But we work predominantly with them in the US market. We're now starting to work with them overseas. So yeah, two great catalysts: new industries, new markets, same clients, right? But then the upside is the data that we're collecting that now enables us to get into new pieces of, of the value chain that our clients require to run their businesses, right? So we're starting to see the network effects of the data in our platform, right, that are enabling more and more different solutions, without us having to invest in new product additions and keep the cost structure similar, but leverage our infrastructure and our, solutions into multiple different solutions for our various clients, right? So, we're very excited about that. You'll see in the future, we typically today, for example, if you look at this chart, you'll see that most of these companies on this chart are actually manufacturers. They don't actually have their own shops. Barring Starbucks, nobody here actually has their own stores. You would agree? They all sell through third parties globally. But the same platform we use here can also be used for retailers, right?
Yeah.
But we don't have that many retailers. You'll start seeing changes in that market where more retailers start talking to us, right? You don't see any research companies out here at all. We haven't even updated this chart for the research companies, but they're starting to show up now, right? You don't see utilities, right? So there's a variety of different pieces happening organically in our business that will continue driving our growth as we move forward. And we also have a defensible proposition because for all of these companies, we are a certified supplier now. It doesn't come overnight with these companies. They have to audit your technology. They have to pilot you sometimes for a year and a half, right?
Yeah.
So we've got those, licenses from these companies to sell to them and sell to them globally now.
This is interesting on the way you're saying, like it's not, I feel like the upside is definitely big if it's not huge. And I was wondering because, also there are a lot of crypto companies that are arriving on the market. Do you plan to be involved in this sector as well?
So, we already are actually. I mean, people don't know
Okay.
much about it, but one of the components of our platform to make shopping fun is to give away things to people that people find valuable and fun, right? One of those things is Bitcoin cards, right? So we actually have been distributing Bitcoin cards. So if you go
Okay.
shopping or if you take, this client, so I have 120 points. Now, if I wanted to cash this out, I can cash it out by buying, by playing a game. I could cash it out for $1 coupon, but I could also cash it out. It's not on this program, but we have the ability to do that today. And we've been doing it for for a year now, 2 years now, where we could give you a $5 worth of Bitcoin or $10 worth of Bitcoin, as an example. So we do have, some exposure to the crypto industry, not a lot today. We had a deal with a company in China, but unfortunately, China shut that down to deal with NFTs, right? So that was unfortunate. But you win some, you lose some, and the crypto industry is here to stay. And if you think about what Snip does, a lot of our business is around creating and managing loyalty points. A point is nothing but a token, and the day we make that token interchangeable, right? We're actually going to be a crypto company from that perspective. But I just want to be very clear, right? I'm not, by any sense of, imagination that Snip is a crypto company today, right? We work with the world's largest companies to make shopping fun, however that translates into. That's what our software platform does, right? That is what is causing the growth of our company, right? Not crypto, right?
Okay.
But crypto is a component that we can leverage, and we're already leveraging it in one way, but there are multiple other ways that we can use it, should the industry adopt some of those standards. I like making money, right? One thing. So I like to make hard legal tender right now. USD would be a very good mechanism for us. The hope of making crypto is not something I'm living off right now.
Okay. At first I was asking, in what sector are you involved? But actually I should ask what sector you're not involved, because when we see all the sectors you are involved, there are so many, which is crazy. And yeah, this is super nice for sure.
Yeah, we it's a great question that you ask us. Traditionally, and this is another driver of our growth, going into this year, going into the next few years, actually, right? We're so underpenetrated in many sectors, right? We have great exposure in the world of CPG clients, right? So, but if you think about, clients in the home and outdoor, space, if you think of clients in, video gaming, if you think of clients in the tire industry, if you think of utilities, right? We are underexposed to any company that needs to acquire customers, retain them, and engage them. Which company needs to acquire customers, retain them, and extend them? All companies on the planet. Right? Everybody needs to acquire customers. Sure. You need to acquire customers for your blog, right? We can power programs for any of those types of customers. Anybody who requires a customer acquisition, retention, and engagement platform, right, requires Snip.
Yeah.
As a small company, we focused on the market that we know best, which is CPG, but now other markets are starting to call us, right? Research, right? Abilities.
No, you're totally right about what you're saying. It's kind of weird, but I've really never thinking about it, like about how you're putting a solution where, let's say for us, money, like opportunities, like how to acquire the clients, customers, viewers, how to keep them, how to extend, and it just like turned on the light in my head, you know.
Let me show you what I mean by that, right? On this simple chart, right?
Mhm.
Apple Green is a gas station in Europe. Top Farm is a pharmacy chain in Switzerland. Electric Island is a utility that provides electricity to your house. We started investing in the US utility sector to plant seeds and tell people that we exist and we're bringing best practices from the world of CPG to utilities. They're like, wow, utilities are in 1970 right now in terms of the technology when it comes to acquiring, retaining, and engaging their customers, right? The CPGs are cutting edge, right? So, if you look at these types of companies, right, they actually are massive industries in themselves.
Mhm.
And our application is the same. It's an
Yeah.
application to help you acquire, retain, and engage customers. And we do it in a way that makes it fun for any client with any marketing strategy, or many marketing, objective that they have that they need to implement.
What else? This is perfect, right?
So when you ask me 5 years from now, I never answered your question. I hope to show you this chart, which is a full page of CPG, a full page of alcohol, a full page of pharma, a full page of home and outdoor, because that is the potential.
Okay, so next time, I hope if we do again an interview to see the growth, you'll be able to show me like one page of each. It's like all the best I could wish for sure. And so thank you a lot for explaining a lot about Snipp Interactive, what it is, where it is involved, where it's going. And now I'm sorry, Jaisun, I'm gonna put you on the side because I have a personal question for Atul. Because when I hear you talking, I can see like I can feel you driving like out of passion, and it makes me wonder. And I love asking this to founders of next like big companies. At what stage of your life, you would accomplish big projects?
I think the stage of the life that I accomplished big projects that I realized, I think I'm realizing it now, honestly, because I haven't accomplished anything big yet. What have I accomplished big? I run a penny stock company on the Toronto Venture Exchange. If this was a company on the NASDAQ and a large cap, right? Yeah, I may have accomplished something. So, but now I get the sense that we can actually get there. So, when you ask me where we're going to be in 5 years, actually, it's interesting, right? That is where we need to be. And that is where we can be given the opportunity in front of us. But I certainly didn't wake up, 10 years back and say, I certainly don't feel like we've accomplished anything so far. What have we accomplished? A $15 million company right now, that makes EBITDA and growth. Okay, good. But that's like the tip of my fingertip. Right?
Okay. Okay, well, thank you for everything. I hope next time again, if we do an interview in the future, I ask you this question again, you'll be able to tell me, oh, now.
Well, I hope so too. That's what we're working towards, and good luck, with your blog. But yeah, stay in touch.
Well, thank you for everything, and it was a pleasure to talk with you, and hope to do again like interviews in the future with both of you.
Yep. Thanks, Mark.
Thank you.
Thank you.